market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London. There is a lot to digest, but let's start with the earnings stories because we are seeing some very interesting market moves. I want to walk you through some of the main ones here. Nestle is where I want to start, taking a little bit of a beating this morning, down about 1.8%. Remember, this is the second day that you are seeing weakness in the Nestle stock, but also in the broader consumer sector. Unilever coming down to earth a little bit as well, given that rally in yesterday's session. I also want to talk about NatWest Group here, higher by 7.4%. Now, they did raise their income guidance. That was an expectation as well. We are still waiting to see what that government stake actually looks like. Remember, the UK government has about just shy of a 20% stake in the company that they are talking about releasing to institutional investors. So we're going to talk about throughout the show the shakeout of that showing up in NatWest shares. Hermes as well, the outperformer in luxury. Lately, we haven't been hearing that combo very much, given the weakness in China. And you've seen that weight show up in LVMH and Richemont. You name your luxury company, there is weakness, except for Hermes, higher by 4% this morning. The Birkin bag really coming to its rescue. And lastly, Mercedes paring some of its earlier losses. We're going to dive into the details right now. Flat in terms of trading in the European session. I want to bring in Louise Dudley into the conversation, portfolio manager for global equities over at Federated. Hermes, Louise, a pleasure to have you on the program. Earnings are coming in so quickly, I can't even catch my breath, to be completely honest. But I want to get your initial take on the numbers that we've seen.
Yeah, so far at the moment, it's been fairly muted. Actually, we're looking at similar levels of beats and surprises as back to pre-COVID type levels. So that's interesting, whereas over the last however many quarters, we've had a lot more companies beating. But what we are seeing, because of the extreme valuations, is that companies are being penalised more on the downside than we're seeing on the upside. So there is this negative skew to results so far.
It's interesting that we're talking about this negative skew because it feels like, specifically in some of the heavyweights, the focus, I'm going to talk about LVMH, but you see this in other pieces of the market, ASML, Nestle as well. There was a lot of weakness in China that was feeding through. And lately, I want to say in the last couple of days, really, you started to see a lot of companies say, well, now we're seeing weakness in the States as well. So what was offsetting the weakness in China is no longer a dynamic at play. Is that temporary?
I think so. I think, the US is still quite mixed. I think things are still going quite strong. I think the latest numbers are actually kind of quite reasonable. And so we actually expect that the US, and certainly we've seen that in earnings so far, that the US has been a lot stronger in terms of earnings growth. So I think the numbers are something like 4 versus 1 in terms of earnings growth. And definitely China is weak. But again, we are seeing actually some green shoots coming through from China. So maybe the sentiment is starting to turn there. And people are starting to get a little bit more confident in their jobs, in the economy, such that the China weakness that we're seeing from the European companies isn't quite as strong.
But when we talk about buying into that, though, if Europe is, and I'm going to have 3 months ago we had this earnings conversation, and the conversation to dive into European equities, or at least the reason to do it, the bull case for European equities, I'm trying to get my words right here because there's so much to digest, is simply that it's a catch-up trade to the States. So that how much of that is true given the catch-up trade may or may not have already played out? Your thoughts?
So we remain definitely kind of more in the US bullish camp.
Okay.
So kind of less on we're seeing the resurgence of Europe. Yes, valuations look better, but actually the US numbers, the underlying economy, everything there seems to be a lot better, and particularly with the kind of political environment. And as we go into there, we've obviously had the kind of surprise out of France and that ongoing geopolitical weakness, which is really rippling through the rest of Europe as well, that unsettling, that instability.
Yeah.
Whereas the US doesn't have that. Either way, depending on which way things go, and obviously, it is somewhat directional at this current time, there's a lot more stability, there's a lot more protectionist measures expected to come in. Very good for U.S. companies.
You are baiting me with the States. Let's dive right in then. I was really trying to make it more European, but I can't help myself. Let's start then with a valuation question in the States. The criticism of the States, and arguably the European market as well, is that the heavyweights are taking all the cake. Luxury in Europe, tech in the States. But if we're talking about that investment and that infrastructure investment in particular, tech is a big part of that. Do you buy tech right now?
So at the moment, it is some of the biggest names. We obviously have had some big sell-offs. In the near term, we expect some of that rotation to continue. So growth was so strong in June, and we are seeing some of that pullback. But in the longer term, these companies are the ones that are expected to continue to benefit. They are such big benchmark weights, and they do have their fingers in so many different areas that even if the hardware's not working, then it's software, different parts of the supply chain. There are definitely areas in tech that are interesting.
So that's great in a lot of ways, that they're so diversified and they're sitting on trillions of dollars in cash. So some of it's a liquidity play as well. But I'm curious about the return on investment in AI, because that's really the latest leg that has driven the story up. You saw it in Alphabet even. They're trying to drive into AI, but at the end of the day, their advertising is still kind of what they're judged by. That's just one example. But you mentioned the hardware versus software question. What is the time frame for all of this AI front-loaded CapEx investment to finally pay off?
So I think it varies a lot. And I think, when you're coming new into a space, there's always going to be more money spent than the initial return. Sure. And particularly if you're a pioneer, you expect some loss making to a certain extent. But there are lots of companies at different stages of integrating it, and they can obviously do it in quite a narrow way, or they can look across the whole business area. So there are definitely some easy wins that we expect to come through in the next 12 months. Gotcha. That is, we're seeing that within financials, within healthcare particularly. Yeah. Maybe some of the longer term, more strategic things that, particularly within industrials, that's going to take a bit longer. And also within tech, there is so much being spent that there are definitely going to be areas that they pursue that don't come to fruition. So
let's dive into the tech conversation more. I think that's the juiciest part of all of this, is that when we're comparing, say, the AI forward path to the adoption of cloud, for example. I'm going to get a little nerdy, but stick with me here. Cloud has been around since the dot-com bubble, and we are still looking at Fortune 500 companies, for example, the S&P 500 companies, if you will, to still adopt onto cloud. That has been a 20-year-long process, and there really have been only two dominant players. You're seeing others try to break into that, but they can't. But that adoption process was what I'm after. If you're talking about the AI story now, are we talking about a stock market rally that is pricing in gains 5 years down the road from now, 10 years down the road from now? Does that set us up for then some sort of correction in the market?
So I think it will be sequential. So I think you'll continue to see gains on an ongoing basis. Different sectors, as I said, have been able to take on some of the gains earlier than others. And definitely for some of the largest companies where it can be most challenging to integrate some new systems, they may have a 10-year plan to do this. They may also be at the same time overhauling their underlying IT systems around data governance, responding to regulation. There's lots of other priorities for companies at the moment. There's also lots of companies worried about, their labour supply shortage issues. Yeah. And that's taking a lot of bandwidth.
But that eats into margins, right? Give us your margin take here. Where is the crunch? Is it in raw materials? Is it in wages? Is it in subsidies that may be going away in 6 months? Where's it coming from?
So, we're definitely seeing, obviously, the inflation numbers coming down. We're starting to see a bit more weakness in employment. So we're seeing those kind of normalise. We do, however, expect that interest rates will remain high. So that cost of capital is going to remain fairly high for the ongoing period. Even if it gets cut, it's not going to be rapidly eroded. So I think actually, margins are actually maybe more stable in terms of, and we're going to see more of the headline growth, I think, coming through in the near term. Yeah,
fascinating conversation, Louise. We could talk about this all day. Several days, weeks if we can. Louise Dudley, Portfolio Manager of Global Equities over at Federated Hermes, joining us this morning to digest some of the earnings on both sides of the Atlantic. Coming up on the program, I think the main event of today, once we get through this earnings palooza, is going to be, of course, the opening ceremony of the Paris Olympics. We know that accommodation prices are higher. We know that security is higher. We're also getting headlines here that there is some train disruption that could affect as much as 800,000 people. We are coming up live in the French capital with some crucial interviews, as well as an update of what's going on. You were seeing live pictures right now of that train station, one of the train stations, I should say, in Paris. We're going to bring you more and the latest details right after this break. Stick with us. This is Bloomberg. Welcome back to The Pulse. I'm Kriti Gupta in London. Now let's go to one of our top stories today. Of course, the kickoff of the Paris Olympics over in France. Today, we are going to get the opening ceremony. But in preparation of that, we are getting headlines this morning. There is travel disruption across France. As much as 800,000 people affected, according to AFP. You are seeing live pictures right now of one of the train stations in Paris. Of course, we're going to keep you apprised of what that security story looks like. This comes in the broader context. Of course, a lot of excitement, a lot of sponsorship, a lot of deals ahead of the Paris Olympics, but a lot of that tourism revenue also at stake as we see some of the bottom lines of these companies that are sponsoring and are very active in Paris, maybe taking a little bit of a hit. Let's bring in our very own Caroline Conan from Paris, who's of course been covering the tick by tick of not only the security situation, but the business behind a really historic Olympics. She joins us live from Paris with a very special guest. Caroline.
Yes, and there's going to be a lot of security, 45,000 security forces tonight at the opening ceremony, 10 hours away from now. But of course, these disruptions on the train network is going to impact a lot of travelers. 800,000 travelers, as you were mentioning, could be stranded, and that could last for the weekend after some massive act of sabotage. Now, I'm joined by one of the big sponsors, is Accor Deputy CEO Jacques Morin. Jacques Morin, we were in a good mood for the past few days with this Olympics opening tonight. Do you think someone with these SNCF disruptions is trying to ruin the party?
Listen, I saw that. I don't know so, but what I'm going to tell you is that this is going to be an immense party. It's once every 100 years, and I think everybody is in the right mood in order to make that thing something that will stay in memory. So I'm not too much worried. Whether it rains, whether there is one thing happening here or there, in the end, it will be a great party.
Yeah, the rain is another concern perhaps for the opening ceremony tonight, because we see it's very cloudy. It's been raining a little bit this morning here. You're one, obviously, of the big sponsors, one of the biggest hotel chains in the world. A lot of your rooms were actually pre-booked by athlete sponsors, media before the Olympics, but it seems like a lot of visitors who were supposed to come, not necessarily for the Olympics, a lot of tourists have decided to delay their stay in Paris, and perhaps we don't have as many visitors as expected. Are you disappointed?
No, I'm not disappointed. I mean, on the Olympic Games, I think the level of occupancy that we're going to get over the period, the 3 weeks, and then the Paralympics, is exactly in line with what we've been saying, like more than 80%, and we're there. And I think the phenomenon that you get before the Olympic and after the Olympic is in fact happening every Olympics. So it's nothing different than what you see every time here. It's just that people tend to forget.
So does that mean that these occupancy rates that we expected actually to be a bit lower, they were impacted for the first few weeks of July, right, before the Games, because of these people avoiding Paris? Yeah,
I mean, it's a mix of many things. And you know what's happening in the politics, you know what's happening on the weather. Last year we had, great events with Roland Garros. So I think you need to look at that all in all with a lot of intelligence. But I'm telling you, what we were expecting for the Games in terms of people coming is what's happening, and that's what is going to make that thing a big feast.
It seems, though, that the luxury segment perhaps is slightly more impacted. There was this report from Yumi Prestige, which represents hotels that charge at least 800 euros a night. They were saying that through most of July, the booking was down between 20 and 50%.
Yeah, but again, that's the period before the Olympic Games. In terms of pricing, what we've been seeing is something which is no different than when you get those big events, when you get Salon du Bourget, when you get UEFA. You get the prices and the yield management, which is such that your prices are probably 2 times what they are on the same period without those events. But I don't think this is something different than what you see when you get those big types of events. So listen, I'm a French person who sees the cup half full and not half empty. So I am extremely, extremely positive on what's going to happen tonight.
So how much does it cost on average to stay in Paris tonight for the opening ceremony in a hotel? Because there was also some numbers showing that hotel rates are down more than 40% from their peak rate, which was about 11 months before the Games. what's the average price? Is that correct?
You know, I think you are probably right in what you're describing in generic term. When we talk about Accor, and the instruction that we've got within our network is that the prices are probably to the tune of a bit more than 2 times what they are on the same period normally. So not something crazy, because in the end, if you push the prices too far off, right, the customer will remember. And what we are privileging about everything is a long-term relationship with our customers.
In the center of Paris, obviously, there's lots of restrictions tonight for the opening ceremony. A lot of businesses, restaurants also have been complaining over the past few days that no one is coming to their restaurants. You don't see anyone sitting at terraces outside because of so many restrictions to get to those areas. Is that also impacting business?
I mean, what you describe is what we all live, so I'm not going to say something different than what you just described. Definitely the security, the fact that there is 45,000 people protecting this environment is creating an environment which is unknown. And so for sure, it does have an effect on the capability of people to move. And so definitely you must have what you describe in terms of effect on the neighborhood businesses. That's definite.
You're obviously a big executive here in France. Did you or do you practice sports still? And if you were competing in an Olympic game, which sport would it be?
That's a good one. I was not expecting that one. Listen, do I practice sports? I love sports. I think sports is the kind of values in terms of teamwork, in terms of effort, in terms of always trying to, model what you can do better that creates a good hotelier. So what sports do I practice? To answer your question, I practice a bit of bicycle, a bit of swimming. I wouldn't say that I'm very good at both, but I'm really trying hard. And in the end, that's what I expect from the team, to do the best with the means that they have.
Not an Olympian yet, but trying his best. Thank you so much. This was Jean-Jacques Morin, the Deputy CEO of the big hotel chain Accor, sponsor of this Paris 2024 Olympics.
Caroline Conan, I think we're all trying our very best to be an Olympian. We thank you so much, of course, for the interview with the Accor Deputy CEO. In the meantime, I want to just get a very quick update here on the security situation in Paris. You are now seeing live pictures of Gare du Nord as well. When we're talking about 800,000 people potentially disrupted, that according to the AFP, it looks like the authorities in Paris saying a massive attack aimed at paralyzing the network ahead of the opening ceremonies over in Paris and the French Olympics broadly. Of course, we will keep you apprised of the situation as we get it. In the meantime, we've got a quick check on these markets as well. One of the big earnings stories this morning, Mercedes joining the pileup in the auto industry as car makers struggle with stalling demand. We're going to dive into the details next. Stick with us. This is Bloomberg. Welcome back to The Pulse. I'm Kriti Gupta in London. Mercedes has joined a growing list of car companies spluttering amid weaker Chinese demand, plus a drop in EV sales in Europe. For more on the details, let's bring in Bloomberg's Oliver Crook joining us from Berlin. Ollie, walk us through these numbers.
Yeah, so listen, they gave a pre-release on their volume, so we knew that the sales were going to be down. They were down by about 6%. But what we care about with Mercedes is not so much the volumes. They're not really a volume player. They really want to keep and preserve that margin. So their margins came in at 10.2%, which was more or less in line with what analysts had expected. But you look at across the earnings here. I mean, revenue down 4%. EBIT down 19%, net profit down 16%. Those are really very poor numbers for Mercedes-Benz, but they are poor numbers, yes, but they're also beats from what the street had sort of expected from this company. So expectations were set pretty low, and they managed to beat it. In terms of their outlook, they confirmed their guidance. They adjusted their margin expectations down just a little bit. They still have a cautious view on China, fierce competition there. They're trying to hold out to the top end of the market. What is interesting is that given all the terrible results we had this week, really these car companies are being punished in the market. Mercedes-Benz just turned positive on the session, so really getting away with it today.
Well, speaking of that kind of outperformance, explain that in the context of the bad week. Has it been the same kind of driver to the downside for a lot of these other EV companies? Very quickly.
Yeah, I mean, it was just really brutal earnings. I mean, you look at the board there. I mean, you had Stellantis lost 9% yesterday. Renault lost 7% yesterday. Overnight, the Ford Motor Company lost almost a fifth of its value just overnight from its earnings story, which was very, very poor. I mean, and this is across the board. So this is something that we're watching very closely. So for Mercedes-Benz to come out with some fairly weak numbers and then to say, actually, the market's willing to look past that, that is something that they're going to be very happy about in Stuttgart today.
All right, Bloomberg's Oliver Crook in Berlin giving us the latest on the auto sector as we see that broad weakness. Mercedes, the key outperformer. Coming up on the program, we're going to U.S. politics. Kamala Harris pressuring Israel's prime minister to accept a ceasefire deal with Hamas. We're going to get the latest out of Washington next. Stick with us. This is Bloomberg. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Let's get to your top stories. Kicking off with the markets is another hit at Mercedes, the German car maker. The latest report slowing EV sales coupled with weak demand out of China. Hermes, on the other hand, bucking the trend in luxury as Birkin buyers driving a sales beat and a stock rally. Plus travel disruption, growing security situation in France ahead of the Paris Olympics opening ceremony. We're going to bring you the latest. Kamala Harris says she pressed Israeli Prime Minister Benjamin Netanyahu to accept a ceasefire and warned him about the death toll in Gaza. Now, the meeting in Washington is their first since the vice president entered the 2024 race for the White House. The comments suggesting a possible departure from Biden's approach to the situation in Gaza.
It is time for this war to end, and end in a way where Israel is secure, all the hostages are released, the suffering of Palestinians in Gaza ends, and the Palestinian people can exercise their right to freedom, dignity, and self-determination.
Let's bring in Bloomberg's Vonnie Quinn out of Washington. Vonnie, bring us the latest kind of takeaways from Netanyahu's meeting with Harris and potentially what may come from his meeting with former President Trump.
Yes, that's taking place in just a few hours in Mar-a-Lago Friday afternoon. But Kriti, yes, this was a massive meeting on the foreign stage, if you like, for Kamala Harris, her first meeting with a foreign policy issue. And it's only day 2 of her campaign in what's become a hugely divisive theatre of war for the United States. And the overtones of what she said will be reaching far and wide into the campaign. She basically said some of the same things that Biden said to Netanyahu, but she also spoke to the Palestinian people and also to the protesters and those who are just desirous of a ceasefire. She said, I see you and I hear you. Let's get the deal done. Even her body language was less warm towards Prime Minister Netanyahu than Biden's would be. They have known each other for 40 years. This is a new connection for Kamala Harris. But it did also give her the opportunity to reach out in some ways to demographics that have been alienated by the Democratic Party in recent months. I'm talking Muslim Americans, for example, and also certain segments of the youth electorate.
Of course, we know that Dearborn, Michigan has kind of been the Achilles heel of some of the polling numbers coming for President Biden before he chose not to run for re-election. Vonnie, I want to go a little bit more into the internal politics of this all. We are in the middle of debate season for the vice presidents and the presumptive nominees on both sides of the aisle. What do we know about the latest developments from both camps?
Well, just in the last few hours, the Trump campaign put out a statement suggesting that they wouldn't actually agree to any debates yet, that it would be imprudent for them to commit to any debates when we don't have a formal nominee yet, which is really something different than what we heard earlier in the week from Donald Trump, who said he'd be quite happy to debate Kamala Harris. In fact, he wouldn't mind doing it more than once on different stages and on different platforms. We had to wait until Thursday to hear from the Harris campaign, Kamala Harris herself telling reporters in person that she would be quite happy to see the split screen, that she wanted to debate him. She said, and I'm quoting, "Let's go." But just a few hours later, again, the Trump campaign spokesperson came out and said, all bets are off the table for now until after there's a formal nominating process. We know that's not coming until the DNC towards the end of August, starting August 17th and on. The first debate had been scheduled for September 10th. It may still go ahead, but as of now, all bets are off the table.
All right, Bloomberg's Vonnie Quinn, we thank you so much for bringing us the latest out of Washington. From Washington, we go to Paris. I just want to bring you the latest and the updates that we're hearing on the security situation ahead of those Paris Olympics, the opening ceremony. About 800,000 people affected when it comes to some of the developments around the train lines. I just want to quote here the French transport minister writing in a post on the X social network, formerly known as Twitter, saying, quote, coordinated malicious attacks have targeted several TGV lines last night and will seriously disrupt traffic until this this weekend. You are seeing, of course, some of the shots, some of the visuals that we have seen from some of the train stations in Paris as well. This, again, ahead of the opening ceremonies that we are expecting tonight along the Seine. Let's go to Paris and bring in Simon Chadwick, professor of sport and geopolitical economy over at Skema Business School. Simon, a pleasure to have you on the program. What a day to get your insights. Before we dive into the economics and the business behind all of this, let's talk a little bit about the security situation. This is always a risk for any host city that brings the Olympics to their doorstep. What do you think the impact might be, not just going into the weekend, as the French transport minister warns, but in terms of the longer-term effects as the Olympics play out?
I actually think that the attacks that we've seen are kind of inevitable. I posted on Twitter last week about this. The games are taking place in the context of a very, very sensitive environment, not just an external environment, but also an internal environment too. The fractious politics of France, as we've seen over the last 3 or 4 weeks, have played out quite dramatically. And a lot of attention has been paid, if you like, to kind of the hard targets of the Olympic Games. So infrastructure, and where you've got large congregations of people. Clearly where it's more difficult to control these things, and perhaps where there's been less attention, is on soft targets. And so attacking railway lines that are outside Paris, I think probably falls beyond the scope of the official security measures that are in place. But of course, those soft targets, nobody's been hurt, we don't think. And nobody's been physically affected. But of course, the disruption that this causes is immense. And if we want to think about this in economic terms, you think about all the people who've been delayed and all the people who now need to be moved and all the time that is being wasted. If we think about those official events, if people are having difficulty getting to these events, so the start times of these events have to be delayed. That has scheduling, TV scheduling, legal ramifications for sponsors and so forth. So these soft targets may not seem particularly disruptive as such, but they are incredibly powerful in the kind of wider impacts that they have.
Well, Simon, again, we'll go into the economics of Olympics specifically, but this isn't just a geopolitical situation in terms of we just had Bonnie Quinn out of Washington talking about kind of the pressures around the Israel-Gaza situation, American politics. You have Ukraine and Russia far more of a touch point here in this part of the world as well. All at a time when the French government is still very much in chaos. Emmanuel Macron talking about the fact that we don't want to solidify who's going to be the leader of parliament until after the games to ensure that there is kind of that continuous or that continuity in French governance. How much of that is actually taking place?
One thing that I would say is the people who are organising the games and the relationship with government, my sense is the French have been incredibly professional, have been thinking very expansively, ambitiously. Keep in mind that for Macron, this has really been an opportunity for France to project itself across the world. And Macron's very, very keen for people across the world, not just to see the traditional France, kind of fashion and culture and the Arc de Triomphe and Eiffel Tower, but also to see a new France, an outward-facing, externally engaged kind of Gen Z type France. And so the French have worked very, very hard at doing this. But I think internally there have been some inconvenient truths building. And obviously those fractious politics that we've already talked about are part of this. And so the national mood has, to an extent, undermined what is now taking place around the Olympics. And that has raised all kinds of issues, not least of those security issues. And we've seen, for example, controversy around the French banning their female athletes from wearing hijabs in competition. At the same time, we've also seen Macron inviting Israeli officials to the Elysee Palace to light Hanukkah candles. And so there has been some, really quite negative sentiment in certain communities across France. At the same time, as you rightly point out, we've got several flashpoints. We've got Ukraine, Russia, we've got Palestine, Israel. We've got ongoing issues around international terrorism in generally. And so this is like a perfect storm for what we're now beginning to see evolve.
So, Simon, let's bring it back to the economics. And we've kind of covered the geopolitical and security aspect of this. When it comes to the Olympics, there's been plenty of research, which I'm sure you're familiar with, that suggests that this is actually not necessarily, in terms of a kind of CapEx spend, one that is a profitable venture. And I think great examples have been in previous Olympics, in Athens and in Beijing, even in Sarajevo as well, where you've seen such a front-loaded cost, only for it to not being paying dividends in the long term. How much of this is simply Emmanuel Macron really hitting the world stage in a big way and really putting Paris on the map at a time when maybe people might be a little cautious around the French government and around Europe in general?
For the rational economists of the world out there, there is this view that if you want to make $2, you've got to spend $1. So, the return on investment is $1. You spend $1, get $2 back. I think that's a very conventional way of looking at such events, and certainly the evidence tends to suggest if we do use this kind of calculation, most cities, most host venues, at best they're likely to come out even, and in many cases they're actually likely to lose money rather than make money. Where I think we are seeing more benefits, hence some of the countries that historically have, or certainly in recent history, have been bidding to stage these events, there are kind of intangible reputational soft power nation branding benefits. Maybe there's something about national identity and about feel-good factor too. And so that does tend to suggest that there are other ways of measuring the outcomes of these mega events. And if we look to that, an important detail here is Macron didn't bid for the Olympic Games. It was actually President Hollande who bid for the Olympic Games. So Macron took up the mantle once he assumed the presidency. But what Macron does is he's got a very sharp sense of image, of profile, of external reputation, of how people across the world see France. He wants to change France in that sense. He wants us to see France in a different way. Hence this, what seems to be this lavishly funded and really quite extravagant opening ceremony that we promised, because this will be the France that Macron wants us to see. But of course, this comes at a cost. And I guess the question then becomes, is that cost justifiable, certainly internally to the domestic electorate, but also is it going to have the impact on external audiences that you intend it to have?
Then talk to us a little bit about some of the things we're hearing out of the corporate space as well. I'm going to give you a few examples here. Air France, KLM, Accor, for example, they've talked about the fact that because the Olympics are in Paris, you're actually seeing the opposite effect to the bottom line, and actually saying that when it comes to things like luxury purchases, you actually might have some more of those purchases happening on the French Riviera, for example. These are just some of the pieces of rhetoric that we're seeing, that French companies that were meant to benefit from this tourism boost are actually writing it down a little bit. How do you square the two, Simon? How should corporate France be thinking about the Olympics?
That's a really good observation that you make, because I've been talking to, for example, hotel owners over the last few weeks, and bookings in many hotels in France, in Paris, have actually gone down. In some cases, they've halved. What we're seeing is a lot of French people typically at this time of the year would actually head to Paris for their holidays. They come up from provincial towns, but of course they're worried about crowds. They're worried about being able to see the attractions that they would normally go to see, the Eiffel Tower, for example. They're also worried about security too, so they're just staying away. And this, I think, is playing out more generally around the Olympics. There is a kind of crowding out effect, I guess, in the sense that the Olympics does displace some of the normal economic activity that you might see in a district like Champs-Élysées, for example. And so, as you rightly point out, is rather than head up to Paris and go to fashion stores in central Paris, why not just go to the Riviera and do that? Much quieter, much easier to access it, much safer. You can do it at your leisure. And so this does raise some interesting questions, I think, not just about the Olympics, but about mega events in general, and the way that they do displace economic activity, but also in the way that they undermine economic activity, because inevitably there is a multiplier effect associated with the Games and associated with that economic activity. So, I do think the Olympic Games does have a case to answer here.
A fascinating approach as we talk about what the economic and business benefits are, aligned, of course, or perhaps at odds with the security situation that is developing. Simon Chadwick, we have to leave it there. Professor of Sport and Geopolitical Economy over at Skema Business School. A pleasure to have you on the program. And coming up, we stick with the economic and the business story coming out of France, where Hermes is standing out from the luxury crowd with a jump in sales. It's all thanks to their Birkin bags that seem to be defying gravity in the luxury sector. That conversation next. This is Bloomberg. Hermes shares in the green after reporting a sales jump in the second quarter in all regions except China, seeing double-digit growth. Now, the Birkin bag maker weathering the luxury demand slowdown far better than some of its peers. And it's all thanks to the richest, the wealthiest, the creme de la creme of their clients. Let's get more from Bloomberg's Angelina Rasquet, Europe's luxury correspondent in Paris, Andrea Felstedt from Bloomberg Opinion, both conveniently matching in green, I should add. Angelina, I want to start with you and dive into the numbers here. Why is Hermes getting this right when so many of its peers are getting it wrong?
Hi there. Yes, indeed. I mean, Hermes has proved over the quarters to be very resilient. It basically, as you said, caters to the wealthiest customers who typically don't come back on spending as soon as inflation hits. And it's got pricing power, and it's got also long wait lists for some of its iconic products. If you think about, the Kelly bag or the Birkin bag. So all of this really helps Hermes, and they grew overall in the second quarter double-digit growth rates, and most importantly, they grew double-digit growth rates in the two main units, which is leather goods and also ready-to-wear. And also trends in so far in this quarter haven't really changed. So pretty positive all in all.
Andre, I want to bring you in here, and we're looking at shares higher by about 5%. And when we talk about this kind of weathering, it feels like, and I love this fact, that Birkin bags sometimes are more valuable as an investment than the likes of gold, for example, or diamonds, because they hold their value and they appreciate. Is that what this is? Is this simply kind of some sort of broader economic statement, or am I reading too much into this?
It's really, as Angelina said, it's they cater for the very wealthy who will spend $10,000 on a Birkin or a Kelly bag. They've also got these long wait lists. Now, what is also interesting is they haven't been completely immune from the wider trends in luxury. So the silk and textiles, which is the silk scarves, the ties, that would typically be a way for less wealthy customers to buy into the brand that they were down, and also watches. So not completely immune from the trends, particularly for those customers who are not super wealthy, who are more comfortable, and they are the ones who are cutting back.
So, Angelina, hop back into this conversation here, because when we talk about this Chinese weakness, this kind of luxury weakness that we've seen spill over, and arguably, I want to ask you about this, but arguably this is something you're seeing in the auto space as well. It feels like in the recent months, you started to hear some of these companies really talk about the fact that the dynamic where Chinese weakness was offset by American resilience, that is now falling apart as well. Is that something you're seeing not just in Hermes, but in the broader luxury sector? Where does the American consumer fit into all of this?
I mean, at Hermes in the second quarter, what we saw is that all the regions grew by double-digit growth rates, except for the region that includes China. I mean, the U.S. is doing really well. However, for its biggest competitor, LVMH, we saw a slowdown across most regions. I mean, LVMH was really helped by Japan. Basically, Chinese tourists, that's what the CFO said, they've been transferring their purchase of luxury goods from China to Japan, because basically they're taking advantage of the weak yen. So that's an arbitrage that we've been seeing.
All right, Andrea, final word to you here. Does this just get worse and worse, given that this kind of Birkin bag story for Hermes is really defying gravity in the broader sector? When we look a couple quarters down the road, are we going to be talking about the same thing?
Yes and no. This quarter has been particularly painful because it compares with the period a year ago. Do you remember when China had just reopened? There was all that enthusiasm. They would be revenge spending again. That didn't carry on. So as we go through, we're up against easier comparisons. So the numbers will automatically look better What we're not seeing yet is a sustained recovery from China. And what we're not seeing, apart from Japan, is that they're not travelling to Europe to spend where they typically spend more. That will be the key factor for a recovery in the luxury sector.
See, this is what happens when you do well on your earnings report card. It comes to haunt you in a year's time. Those tough comp sales always get you. Angelina Rascouet, Bloomberg's European luxury correspondent, joining us from Paris. Andrea Felstead from Bloomberg Opinion, both covering the beat tick by tick. We thank you both so much. Coming up on the program, we're going to dive right back into the car space. Some similar themes that we heard in the luxury conversation. We're going to dive into the details on what's been a pretty brutal week for those earnings next. Stick with us. This is Bloomberg. Welcome back to the Pulse. I'm Kriti Gupta in London. Weaker Chinese demand and a drop in EV sales in Europe have hit car makers hard in a pretty difficult week for earnings news out of the sector. I want to bring in Bloomberg's Oliver Crook out of Berlin. Ollie, walk us through kind of a very painful week for the sector.
Absolutely, Kriti. I mean, if you just look at some of the pricing action and what has happened in the stocks this week, it tells you a lot of the story. And some of the moves were actually pretty historic in some sense. Stellantis was down 9% yesterday. You had Renault down 7%, up to 14 at one point. But really the standout, Kriti, is the Ford Motor Company, down 18% yesterday after their earnings went out. That is the Ford Motor Company losing almost a fifth of its value in one trading session. Pretty remarkable. Same thing at Nissan. And you saw Audi, you saw Porsche, you saw Nissan, you saw all these companies also cutting their outlooks. If it sounds bad coming from me, Kriti, have a listen to what it sounds like coming from the CEO of Stellantis, Carlos Tavares.
The automakers are under pressure. The auto industry is in a turmoil. It is true that the transition that we are going through is immensely challenging, and this is a bump. There will be other bumps. This will last for a few years. This is not a short-term turmoil.
And what's really interesting, Kriti, is that really the macro story and the overall story of the auto sector hasn't really changed that much, but this really feels like the quarter where the rubber is starting to hit the road, where the sort of shifting timeline on EVs, what that means for the model mix is really kicking in. The question of China, weak demand, within the domestic market, but also all this competition. And really the bottom line, Kriti, is there is a huge amount of competition, a lot of companies, and the demand is just not there.
A really painful story, and it's interesting that we're talking about hitting the brakes, pun not intended, on some of that EV transition story. The fact that Carlos Tavares, of all people, said that this is not a short-term story is fascinating. Bloomberg's Oliver Crook from Berlin, we thank you so much. And of course, that pain that Ollie was just talking about, you're seeing it show up in the stock market, and by extension, the DAX has been weaker significantly. The luxury story really weighing on the French index as well, but the underperformer this week has been that German market. This is really the Achilles heel that you are starting to see in terms of the auto story. We're going to keep you apprised of if you start to see a little bit of a rebound the way you are perhaps in some of those luxury stocks. A conversation that may bleed into the U.S. session. Up next, Bloomberg Brief with Danny Berger and Manus Cranny kicking off, or at least leading to the trading day in New York. Stick with us. This is Bloomberg.